Do you think it is wise to hold Tesla shares at the current price? The stock is still below $200, so some investors are frantically selling off their shares, while others advise against selling despite the current price. Take note of this information. Just like any other financial venture, investing in Tesla stock carries some risk, but there are also significant rewards. Obtain an additional $10 in cash, open an account, and deposit any amount to Moomoo. This is a time-limited offer in honor of Moomoo's 10th anniversary. Click the link below to take advantage of it. Moomoo is an excellent stock trading platform with a variety of innovative, user-friendly capabilities. I believe many of you will find it really beneficial, particularly if you wish to be more actively involved in your investments. For instance, learn when it is appropriate to purchase and sell stocks. There are a number of benefits to investing in Tesla stock. First, the stock trade is not constrained by news or fundamentals. Rather, it moves solely on sentiment. This means that a calm investor or trader can take advantage of the market. Additionally, Tesla's brand advantage and posh offer viral marketing mean that the company's underlying fundamentals remain strong, although this may change in the future. Finally, although there are a few drawbacks to purchasing Tesla stock, the first is its valuation. The second is Elon Musk's seemingly never-ending controversy. Elon Musk, the CEO of Tesla, stated that while some are pressing to sell them off during the company's annual shareholders meeting in early August, production efficiency may be Tesla's largest competitive advantage. However, he also stated that one of Tesla's biggest long-term potential looking ahead, Musk predicts Tesla might reach a production run rate of 2 million vehicles by the end of this year, and he restated the goal of 20 million vehicles by the end of the decade, as previously announced. The answer may lay in robotics powered by artificial intelligence. Although Tesla's stock is expensive when it comes to valuation, the firm has consistently produced strong revenue and earnings growth, and yearly earnings predictions indicate that the company's growth trajectory is still very much intact. The success of Tesla is largely dependent on its business model. One of the most prosperous public companies in history, Tesla upended an auto industry that had seen no significant startups succeed for decades. Nevertheless, in the first week of this month, the price of Tesla's stock fell sharply to below 200. In addition to the company's struggles with COVID-19 related issues, other factors are also impacting the stock. Analysts believe that Musk's acquisition of Twitter could have a number of effects on Tesla. After being expanded to produce approximately 1.1 million vehicles annually, Tesla's China plant supplied 71,704 electric vehicles in October, fewer than the record 83,135 delivered the month before, according to Barron's. Though Tesla recently lowered prices for Chinese customers, there may be another factor weighing on Tesla shares today that has nothing to do with the company itself. Although Musk's initial plan to acquire and his actual acquisition of Twitter had been news for months, now that he has taken Twitter private, the entrepreneur has more major items on his plate. However, this factor may not be the biggest concern for Tesla investors. China's strict COVID-19 policies, which have resulted in lockdowns throughout the region, have negatively affected productivity. Musk borrowed money to purchase Twitter, so interest will need to be paid from the company's cash flow or another source. Until Twitter's future course is more clear, a number of businesses have indicated that they will not be running advertisements on the platform. This could result in reduced income flow, and Musk may have to pay the interest on his debt with his own money. The issue facing Tesla investors is that Musk may need to sell additional shares if he needs quick cash. This might be the reason why Tesla's stock is currently declining, or it could be the result of other shareholders attempting to purchase that potential. There has been a lot going on at Tesla during the first week of November. Elon Musk, the CEO of the company, announced that he would sell roughly 10% of his stake in the business, based on votes cast in his Twitter poll asking users whether or not he should sell his shares. Approximately 58% of respondents said that he should sell 10% of his Tesla stock because there has been a lot of talk lately about unrealized gains being used as a way to avoid paying taxes. Musk also added that he only has the majority of Tesla shareholders have opposed Musk's plan. to purchase Twitter from the start because he has stated he would need to exercise a large number of stock options in the coming 3 months, which would result in a large tax bill. However, Tanaka Capital Management Chief Investment Officer Graham Tanaka says that while selling that many shares is a lot, it's not up to the public or Twitter to tell Elon Musk what to do. This will only be a minor fluctuation in the long run, according to Greg Basuk, Chief Executive at AXS Investments. They see today's activity as more of a very dramatic and very short-term reaction to Musk's developments on Twitter. He believes that there will be some downward pressure on the Tesla stock in anticipation of Musk selling shares, and maybe some others trying to sell shares in advance of that. Tanaka believes that Elon Musk is on a different track than Bill Gates and still has a lot of creativity and value creation for shareholders ahead of him. We are cautioning investors that any decline that occurs through today or tomorrow may present a very interesting buying opportunity for those who were already bullish on the company's growth prospects going forward. According to Nicholas Hyatt, an analyst at Hargreaves Lansdowne, a large share sale always has the potential to disrupt a company's share price as a simple result of supply and demand, but it shouldn't fundamentally alter Tesla's attractions or valuation, and if handled well, the sale shouldn't disrupt the share price over the long run. It is clear that most analysts are not concerned about the recent performance of Tesla stock in the stock market. In fact, David Madden, a markets analyst at Equity Capital, believes that there is no reason to be concerned about the stock price. The sale, if handled well, shouldn't disrupt the share price over time, according to Nicholas Hyatt, an analyst at Hargreaves. Russ Mould, the director of investment at A.J. Bell, stated that investors may try to sell before Musk does, potentially then buy back at a lower price if they still like the stock. It's also an open invitation for short sellers to place a bet that the shares will fall, earning a profit for them if the stock does decline in price. Additionally, Russ provided, according to Neil Wilson, chief market analyst at markets.com, Musk just wants to cash out while things are good right now by selling some stock as the price has recently skyrocketed. Musk controls about 23% of Tesla, and many in the public believe that he would sell as little as 5% to 6% of the company, with 10% being a larger sum that would surprise some investors. However, according to Wedbush Securities analyst Dan Ives, it's a digestible number we are not overly concerned about. Rather than having this portion of stock linger for a year and support any non-fundamental bear thesis on the story, we would prefer that Musk rip off the Band-Aid now and sell it. Overall, most analysts don't seem to be too concerned about Musk's decisions that are unintentionally hurting Tesla's stock. In fact, most of them seem to understand the reasoning behind Musk's move for additional content on Tesla stocks. Don't forget to subscribe to this channel.